Scotiabank is cutting 3% of its global workforce as the global economy continues to decline. So let's get straight into this. And it's not just Scotiabank, guys. There are other banks that are doing the exact same thing. So let's see what they're saying about it, though. Scotiabank cutting 3% of global workforce will take 590 million Q4 charge after tax. So Scotiabank said Wednesday that it is cutting about 3% of its global workforce, becoming the latest Canadian bank to trim staff amid continued economic uncertainty. But I thought the finance minister, Chrystia Freeland, was saying everything was okay. The economy is resilient. The labor market is resilient. And the Bank of Canada is saying there's room for a soft landing here. The Federal Reserve too. So it seems like that's not the case. Obviously, when a business is cutting staff, even a bank, you have to watch that like a hawk because something obviously is going wrong there. A growing business that is doing well is never going to start cutting its workforce. You have to remember that, guys. There are bigger things going on here that I think you and I know of. The bank said the cuts, which will work out to around 2,700 staff, come as a result of bank digitization and automation, as well as streamlining efforts and shifting consumer preferences. And basically, guys, this is just corporate bullshit. This is just corporate BS, essentially, and this means nothing. I mean, they're always going to have to come out with an excuse to appease shareholders, and they're going to make the best case that they can that everything is absolutely fine and there's nothing to see here. But as we're going to get into later in this video, there is considerable evidence that the economy is in fact imploding, and the potential for a banking crisis just continues to increase, considering the massive risk exposure that Canadian banks have to emerging markets, to China, and to the residential housing market here in Canada, which is collapsing and falling apart as we speak, and has been the case for a long time, since 2020, since everybody stopped paying their mortgage with mortgage deferrals. Things have only gotten worse since then, thanks to the government distortions. So let's continue to see what they're saying here. The bank had already started trimming its headcount at the time, reporting that its total employees stood at 91,013 employees in its third quarter, down from a peak of 91,264 in the first quarter of this year. So they have been trimming staff anyways. And it's not just Scotiabank. This is the thing that I want to outline to you. Desjardins to cut close to 400 jobs amid economic uncertainty. Again, what's the economic uncertainty that they're talking about? Come on, I thought this was a booming, resilient economy. The government, they came in 2020 and they just fixed everything. You know, governments are fantastic about that. You get a new government, they're going to fix everything. Everything is absolutely fine. They just come in with new distortions. Whenever I hear a politician, conservative, liberal, whoever it is, I really don't care, say, I'm going to fix this, I think, oh, here we fucking go. Here we go. And I just think you're going to do the exact opposite of that because they don't have a clue what they are doing, most of them. Desjardins Group says it is cutting close to 400 jobs as it responds to economic uncertainty. The financial services cooperative says heightened volatility, inflation, and the potential for an economic slowdown have added pressure to the need for prudent management. So at least they're being a little more honest than Scotiabank, who is just saying, oh, it's digitization. It's just this new world for banking that we're in. But at least they're being more honest at Desjardins. Desjardins is obviously a massive mortgage lender in Canada as well. It's one of the big 6 or 7 mortgage lenders that are in Canada because it's essentially a monopoly on the industry there. So spokesman Jean whatever says in a statement that Desjardins is also working to recoup the benefits of its massive investments in recent years, particularly in technology, and so it needs to step up the pace on these efforts. And if they're referring to green technology, we already know what a complete disaster this is going to be. Most of these companies are money losing. Most of these companies are going to go bankrupt or not show any returns for years and years down the road. And what is going to happen when, you know, they're trying to finance debt out at 5, 6, 7, 8, 9% plus interest rates? I mean, it's probably even more than that. It's probably more like 15 to 17% because the risk of these companies going bankrupt is significantly higher than your AAA rated company. So it's very interesting what is going on. And then I want to show you this as well because this came out last week. So there were 448,000 Canadians receiving regular employment insurance benefits in August, up 9,100 or 2.1% from a month earlier. This was the 4th consecutive increase in the number of regular EI recipients despite success successive increases, the total number of regular EI beneficiaries in August remained below levels seen in August 2022. So they're saying there that basically just don't worry about that because it's lower than it was last year. But we know the disqualifications for unemployment insurance have never been this high before. In fact, you have to go back to the 1990s, the late 1990s, to find a time where unemployment insurance disqualifications were this high. So remember that. So there's a lot of people who are disqualified from getting this unemployment insurance. And we've always got to look at trends. Trends are something that you really need to look at when you're looking at anything like this. And as you can see, there is clearly an upward trend in the number of regular employment insurance beneficiaries. So it bottomed out, as it says right here, around sort of February-ish, February, March, and it has since started to trend upwards since then. So you've seen consistent increases in the amount of unemployment insurance claims. Contrast that with the unemployment rate, which has pretty much kind of just remained steady. It hasn't really gone up significantly, but obviously unemployment claims, those are rising significantly. And that is a really interesting dynamic to note, because obviously when you have the unemployment rate doing nothing, yet you have more people applying for unemployment insurance, that doesn't mean good things for the economy, does it? It doesn't mean the economy is booming or anything like that. And obviously Scotiabank, I don't have to tell you this, but they are in China, and this is right off their website, but it literally tells you what they do in China. We provide a range of products and services to business customers in China, local currency loans, other currency loans in the form of euro-dollar loans, cash management, balance reporting, wire and SWIFT transfers, deposits. It's very interesting actually, because the loans portion is the one that I am most concerned about. And obviously we don't know the potential exposure there to Chinese real estate. When you consider domestically in China, the real estate market is such a large percentage of GDP, just like it is in Canada, ironically, you realize pretty quickly that the probability of them having loans in this real estate sector is pretty high. And it's just a case of how long can they hide these loans? Now, you're probably asking the question, what other Canadian banks have exposure to China that we know of? One other one that clearly states it and has its own website is BMO, Bank of Montreal and Scotiabank. But that doesn't mean that the other banks don't have exposure. These are just the ones that actually market out in China. And, you know, Scotiabank as well is in many emerging markets. And, you know, Scotiabank is actually heavily into Mexico. Now, Mexico has had a massive boom in real estate since 2020. Partly, a lot of reasons for that have been the fact that the Mexican economy was open, so a lot of travel went to Mexico, and that led to a boom in investment into things like Airbnbs and lots of local Mexicans taking out loans to actually buy these Airbnbs. Mexico is often viewed as like a third world country, but in fact, there is a lot of middle-class Mexicans and people who are essentially the same as Canadians, and this could lead to a potential disaster down the road, considering what is happening with Airbnb and considering the amount of foreigners that also poured into these markets in Mexico, expecting that the good times were just going to continue forever and ever and ever. And we obviously know that is not the case. So another thing that is going on, customer satisfaction falls at largest banks as Canadians feel worse off. So, I mean, this is likely to happen. Obviously, it's mainly going to be to do with the fact that the banks are squeezing their customers right now, even though they're getting loads of money from the Bank of Canada for just parking reserves, essentially, because of what happened in 2020 and 2021. So it's kind of a disgrace, in my opinion. But they are essentially, obviously, going to go down in the rankings in terms of customer satisfaction because people are paying more money for loans. They're paying more money on their mortgage, their credit card. So they view the bank as this money blood-sucking parasite, which is really always has been. It's just the fact that interest rates have been artificially low for the past decade. And really, when you look back, they have been historically low for the past decade. Not just the past couple of years, but the past decade. In fact, where we have interest rates right now is just a more normal level. And that's what people really refuse to actually acknowledge. But that is the case. So, you know, people can't even handle these interest rates because Canadians took on so much leverage in the past 10, 15 years. And obviously, that was the time where interest rates essentially reached their bottom. So it's going to be incredibly interesting to see what happens. But obviously, we know this is not a good thing long term. And obviously, Toronto skyscraper with 1.7 billion of debt has been put into receivership. The reason why I brought this up is because it's becoming more and more obvious obvious every day that the risk that's involved in the housing market, a lot of this risk falls onto the balance sheet of the commercial banks in Canada. And obviously, there's a monopoly on the banking system in Canada. So there's only really 5 big banks in Canada. So when you think about it, the risk is concentrated in these banks. So you're going to begin to see more and more things like this because essentially it's just not cost effective to build these massive towers. And you haven't got the investor demand either. I mean, you can go and park your money in a 1-year treasury, get well over 5%. Why on earth are you going to buy a condo and negative cash flow? Now, don't get me wrong. There are idiots out there. They're buying in the Calgary real estate market right now. Because if you do any of the calculations there, you quickly realize, like, come on, guys, what's going on here? You must be absolutely insane. But they're out there. And the dumb money right now is circulating in Calgary. But eventually, once that burns off, we'll be left with the aftermath, as we always are. You know, these bubbles just leave a tornado-like pathway behind them. So let's also just quickly look at the consumer price index that was reported a week ago or a couple of weeks ago. It was interesting because the consumer price index, it was reported minus 0.1% for core inflation. So a little bit of disinflation, actually deflation in that number, but it's really disinflation overall. But if you look at the year, I mean, we've had this happen before. So we really don't know whether this is a trend or not, and it's going to continue to last. It could possibly continue to last because the consumer is done. But I think what's really going to happen is core goods like your food, like your energy, those are going to continue to go up in price. Meanwhile, things that you don't need, those are going to be the things that really fall in price. And there's some interesting things in this report, one of which really shocked and told a story for Airbnb, which I'm going to be doing a video on this week. Price growth for groceries continued to slow in September, but remained above headline inflation, rising 5.8% year over year, following a 6.9% increase in August. That is total BS, as you guys know. They use a lot of substitution when they produce these numbers, which essentially means you're going to buy steak, essentially. And they'll say, wow, because the steak price went up so much, you went and bought ground beef instead, even though you didn't. You wanted the steak. So your standard of living actually declined, and they measure the price increase on the ground beef instead because that's what they're assuming you actually bought. But again, it's like I said, the standard of living for you actually went down because you're buying ground beef now instead of steak because steak has gone up in price so much. So it's really interesting when you think about it like that. But they use this manipulation all the time, and you guys know that. That's why I call it the CP lie. What I really wanted to highlight here was consumers paid less year over year for air transportation, minus 21.1% in September, coinciding with a gradual increase in flights offered by airlines over the previous 12 months. So you've got more supply of essentially flights and you've got less demand. You've got falling demand. The travel boom is essentially over, and you can see that in the price change of airfares, minus 21%. You've got airlines like Porter coming onto the scene, and I'm so happy to see Porter essentially just ripping apart Air Canada and WestJet, because yes, we've got these low-cost budget airlines that have emerged over the past couple of years, but really they're nickeling and diming for your bag and your seat and everything else. If you want anything extra, you have to pay for it, whereas Porter is like pretty much a full-service airline. In fact, their planes are even better because they do the 2-2, so generally it's much better. But I'm happy to see Porter has moved onto the scene, and I've been looking at airfares to actually go to Toronto because I want to do some coverage of stuff down there, especially close to the border. And what's really been interesting is you're looking at 1/3 of the cost to take a Porter Airlines flight to Toronto from Calgary than a WestJet or Air Canada flight. It is essentially, they are being destroyed by this. So a lot has to do with that as well, at least in the domestic market. But in the international market, that is more of a monopoly, and you're seeing those flight prices fall as demand falls. And you're also seeing this from the side of Mexico, like we discussed last week, where I showed you that article that they're recording less numbers coming through the airports in Mexico. Obviously, that's going to happen. Mexico, everybody's been going there for the past 3 years, and now they want to go to Europe, they want to go other places, or they just can't afford it because they're completely broke. So it's interesting to see what's happening there. We'll continue to monitor it. And then the last thing that I want to go over here is what is happening with the big 5 stocks. So obviously, we've got the Bank of Nova Scotia, which is cutting staff, but we've got things going on at other banks, specifically CIBC, that that are of note. But if you look at the 5-year returns for the Bank of Nova Scotia stock, it is down nearly 20%. So think about that. Your 5-year return on this stock, minus 20%. So that is really not a good sign. Obviously, the markets are starting to price in that the banking system is not as solid as it is in the United States, in Canada, because when you compare it to banks like Citibank, JP Morgan, even Wells Fargo, you can see that clearly the Canadian banks are suffering much, much worse. And I think a lot of that has to come with the perceived risk that is now increasing of the housing market. Now, how that plays into funding at those big banks can be catastrophic, because if you have major lenders say, actually, we don't want to lend you, we don't want to extend you any more credit, Bank of Nova Scotia, because we're looking at your housing market, we're looking at what's going on there, and we're thinking, this smells like 2008. That puts them in an even more terrible position, because without that funding, they are then put in a precarious place, and that can mean they can essentially go bust without that liquidity when they need it. So you have to bear that in mind, and that's why I keep saying the risk of a banking crisis just continues to increase here, especially as these stocks go down. So these stocks actually declining, it does have an impact on the business of the Bank of Nova Scotia, the Royal Bank, and the CEOs especially. I hate that the companies operate like this that are publicly traded, but CEOs essentially, they care more about the shareholders and their own bonuses than they do about the employees and the company actually growing. So they'll cut staff to appease shareholders versus actually doing other cuts, cutting their own salary, cutting their bonuses. You know, CEO bonuses have grown at an exponential rate over the past 30 years. But this is the dynamic that we have put into the market, with essentially CEOs now getting stock as bonuses. So it's not a good thing. And obviously we'll have to continue to monitor it and see what happens in the future. So anyway, I want to thank you so much for watching this video. If you've enjoyed this video, you might like this playlist here. You might like this video here. If you're looking for a VPN to get around Bill C11 to see Canadian news again, then go to expressvpn.com/market mania. That's my VPN. I use it all the time, every single day. Please sign up to the free email list in the description, and I will see you in the